Good morning, Colorado, and welcome to the official first day of fall. It's an absolutely gorgeous day here in Denver, Colorado, and I know a lot of people are going to be going up to the mountains to witness the aspen leaves turning yellow, and that's going to be a fabulous sight as always. I welcome you to Colorado Mortgage and Home Loan Rate Update for Friday, the 23rd of September. I'm Randy Flood, the only certified mortgage coach in the state of Colorado. As you can see down here, there's really no news. Of course, Europe is still on everybody's mind. In the rates go up category, I put the technicals in there, and I'm going to talk about that in a second. 30-year bonds are at near all-time lows. Back in the refi boom of 1994, the bonds got down to 4%, and everybody thought that was crazy. They thought, no, it could never be this low. Well, we're down at 2.75, and we're a quarter percent away from the all-time lows. And a lot of people are comparing this scenario that we have right now with the 1930s, with the Depression, and there's going to be a lot of talk about that, I think, in the future. But once again, the 30-year bonds are near all-time lows, which is driving interest rates down as well. Here's what's going on in the mortgage back securities for today. And the good part is we're trading within a range. I mean, it was good that we tested the top. And I believe that we'll stay within this range, at least temporarily. And, I think we'll go on and test the range further. And this is also normal. I want to show you this chart because, once again, we are within the range. And when I'm talking about testing the range, what happens is there's several different theories as far as how the markets behave. And typically what happens is when a market, and here's a low, and you can see that we ran up really high. And there's several theories. One is the market will naturally correct at 50% of whatever the run up is, or two-thirds. And if we do the two-thirds, it's going to bring us right back down here to about 100 and 101.5, and that's not bad. So I think what'll end up happening is we may stay up here for a while, but sooner or later we're going to come back down here, and that is a normal and healthy move. So don't get concerned. Here's what the other mortgage market timing services are recommending. Rate Alert, their position is unchanged. Now, Rate Lock Advisory, yesterday they were saying float all the way. Now they're saying if you're closing a loan within 20 days, go on and lock it. I still think that there's still going to be room for floating, so I would still go with what Rate Alert is recommending. In summary, I just want to let you know that credit card debt soared. It's actually about $318 billion more than last month. And this is very similar to the huge move in 2008. And I don't believe that, well, personally, I believe that it's because of out of necessity. People are having to buy things on credit because they're unemployed, their wages have been reduced, and I think they're also maybe storing up things for the future, because I got a feeling a lot of these people are going to be filing bankruptcy in the near future. The Euro banks could need as much as $200 billion as far as bailing out the various banks. Greece alone, if they did default, would destroy about $60 billion in bank assets. And I don't see the European Central Bank allowing Greece to fail, because if they do that, it's going to be a domino effect. We'd also have Portugal and Ireland. They're very, very fragile. And of course, we have Ireland and Spain as well. So I don't see that happening. The 10-year dips below 1.7% last night, and that's one of the lowest it's ever been. As I mentioned, we closed the gap. Short-term risk is about 102.5. And you ask why I include these technical figures. I do that because sometimes financial planners like to see the technical side too. As I mentioned before, I think the midterm risk is going to be around 101, 1.5. And as I mentioned, all this is healthy and normal moves and normal corrections. So Don't get upset or don't get fearful. And one caution I'd like to say is don't be sold on yesterday's rate. I know a lot of the mortgage people are out there be quoting you yesterday and doing it as a bait and switch. But I think it's very important to trust the person who actually monitor the rates and can go on and help you lock at the appropriate time. Now, the thought of the day, a system equals, saves yourself time, energy, and money. If you take a look at any successful corporation or individual, they have systems, and that's what I also do too, as far as having a system in place where I monitor the rates and can make wise recommendations to my clients so that they can lock in at the appropriate time and save the most money. If you're looking to buy your Colorado home or refinancing your Colorado mortgage, definitely give me a call. I'm available 24/7. And for the mortgage advice that you can count on, and if you like what I share with you every day, go on and click the like button below and also share it with your family, friends, and coworkers because I know too that they could benefit from this valuable advice. And as always, only wanting the best for you. Take care and have a great weekend.